Charlie Munger always had this fascinating ability to demystify complex concepts with disconcerting simplicity. When he talked about financial planning, it wasn't with that professorial tone that most consultants use, full of jargon and colorful charts. It was different. It was almost as if he were telling a story around a campfire, sharing decades of accumulated wisdom with whoever wanted to listen. One of the most penetrating observations that Munger made throughout his life was about the contradictory nature of financial plans. He said that every really good financial plan seems completely wrong at the beginning, and it wasn't an empty provocation or a catchphrase for motivational speeches. It was a profound truth about how we, human beings, process information, make decisions, and deal with uncertainty. Think about that for a moment. You sit down with a financial planner or decide to make your own plan. The numbers are there, the projections seem reasonable, the goals are defined, but there's something bothering you. An internal voice whispering that this won't work, that you should be doing something different, that everyone is following another path. This feeling is not accidental. It is practically inevitable when you're doing something truly intelligent in financial terms. The reason for this is deeply rooted in human psychology. Our brain evolved to seek immediate gratification and avoid short-term discomfort. This mechanism was extremely useful when we lived in savannas and needed to decide quickly between hunting or being hunted. But when it comes to long-term financial planning, this same mechanism becomes our greatest enemy. Munger understood this better than almost anyone. He and Warren Buffett built Berkshire Hathaway not by following what was popular or comfortable, but by doing exactly the opposite of what most people were doing most of the time. And at the beginning, every decision they made seemed absolutely wrong to external observers. Buying boring companies when everyone wanted technology, keeping cash when the market was high, refusing opportunities that seemed brilliant because they didn't fit their rigorous criteria. When you create a solid financial plan, you are essentially saying no to a series of things that society says you should do. You're saying no to that new car that all your colleagues are buying. You're saying no to expensive vacations in exotic destinations that dominate your Instagram feed. You're saying no to the property that everyone says is a great investment. And each of these no's seems wrong because it goes against what you see around you. But here's the secret that Munger always emphasized. True and lasting wealth is never built by doing what everyone is doing. If it were like that, everyone would be rich. The math simply doesn't work that way. When you follow the crowd, you get median results. And median results in personal finance mean working until your 60s, having a modest retirement, and depending mainly on social security. There's also the time factor, which Munger loved to discuss. A good financial plan takes time to show results. It's not like buying a lottery ticket where you find out in a few hours if you won. It's more like planting a tree. In the first year, you barely see change. In the second year, it still seems insignificant. But by the 10th, 15th year, you have a robust tree giving shade and fruit. The problem is that in the early years, it seems like you're just wasting time and resources digging holes in the ground. The mathematics of compound interest, which Munger called the eighth wonder of the world, is completely counterintuitive at the beginning. You invest 5,000 reais per month during the first year, and at the end, you have little more than 60,000 reais, less if the market is bad. It seems insignificant. It seems like you're sacrificing yourself for nothing. Your friends are spending those same 5,000 on experiences, on tangible things. And you have numbers on a screen. But Munger always preached patience and long-term thinking. He said that the average person simply can't imagine how small numbers can transform into large numbers over time. It's not linear, it's exponential, and our brains are terrible at understanding exponential growth. That's why pandemics catch everyone by surprise. That's why climate change seems abstract until suddenly it isn't. And that's why solid financial plans seem wrong at the beginning. There's another aspect worth exploring: the social opportunity cost. When you start following a serious financial plan, you necessarily distance yourself, even if subtly, from your usual social circle. You can no longer participate in all the expensive outings. You need to refuse invitations. You have to explain why you're not buying certain things, and this creates a social dissonance that is profoundly uncomfortable. Munger lived this firsthand. He tells stories of when he was young, working as a lawyer, and decided he needed to save aggressively to eventually have capital to invest. This meant living more modestly than his colleagues, driving older cars, living in smaller places, and people asked, commented, judged, why was a successful lawyer living like a student? The answer only became clear decades later, when he had financial freedom while many of his colleagues were still trapped at their desks. The uncomfortable truth is that an intelligent financial plan will always seem radical in the context in which you live. If you earn 4,000 reais per month and decide to save 1,500, this will seem insane to most people around you. If you earn 20,000 and decide to live on 8,000, saving the rest, people will think you're crazy or miserly. But these are exactly the types of decisions that create real wealth over time. Munger also talked a lot about the importance of understanding your own cognitive biases. He studied psychology extensively, not out of academic interest, but because he knew that understanding how our mind deceives us is essential to making good financial decisions. And one of the most pernicious biases is present bias, our tendency to overvalue what is happening now and undervalue the future. When you're creating a financial plan, you're fighting against this bias at every moment. The present is shouting, buy this, do that, enjoy now, while your financial plan is whispering, wait, be patient, think long-term. And the shout always seems more convincing than the whisper, at least at the beginning. But here's something that Munger always emphasized and that many people miss. A good financial plan isn't just about depriving yourself. It's about making conscious choices about what really matters to you. He was never in favor of a miserable life in the name of wealth accumulation. He was in favor of understanding your real values, separating them from cultural noise, and then aligning your spending with those values. The problem is that most people have never done this internal work. They spend based on what they think they should want, not on what they really want. They buy bigger houses because that's what successful people do. They buy expensive cars because that's what signals status. They spend on brand-name clothes because that's what their colleagues do. But when you really sit down and ask what brings meaning and satisfaction to your life, the answers are often completely different. Munger lived in a relatively modest house in Los Angeles for decades, even being a billionaire, not because he was stingy or miserly, but because more space simply wouldn't add significant happiness to his life. He preferred to spend his time reading, thinking, talking with interesting people. And that didn't cost significant money. But for someone from the outside looking at the beginning of his journey, the choice to live modestly seemed wrong, limiting. There's also the question of uncertainty. A robust financial plan always takes into account that the future is fundamentally uncertain. You can't predict economic crises, health problems, career changes. And because of this, a good plan always includes substantial safety margins. You save more than you would theoretically need. You maintain a larger emergency reserve. You don't leverage to the maximum, but these safety margins seem excessive when everything is going well. When the economy is growing, when your job seems secure, when your health is good, keeping 6 months of expenses in an account that barely yields seems foolish. It seems like wasted money that could be being invested more aggressively or spent on pleasurable things. But Munger always said, you never know when you'll need a safety margin until you need it. And at that moment, it's non-negotiable. The discipline necessary to follow a financial plan also goes against many of our instincts. It requires doing the same thing repeatedly, month after month, year after year, even when it's boring, even when it seems like it's not making a difference. There's no drama, there's no excitement, there's not that adrenaline rush that comes from making a bold bet that can change everything. And our modern culture hates boredom. We're constantly being stimulated, constantly seeking the next novelty, the next excitement. The idea of making the same automatic transfer every month to your investment account, buying the same index funds, without drama, without stories to tell, is profoundly unappealing. But that's exactly what works. Munger used to mock people who were always looking for the next big deal, the hot tip, the secret that nobody else knows. He said that investing well isn't about being smarter than everyone. It's about being more rational and more patient. And rationality and patience seem very boring compared to brilliant intelligence. There's also the aspect that good financial plans often involve making choices that seem too small to matter. Saving 10 reais per day by cutting out coffee away from home seems insignificant. Choosing a slightly smaller house and saving 200 reais per month on rent doesn't seem like it will change your life. Driving your car for 3 more years instead of trading it in feels like a minimal difference. But Munger loved to say that great results come from small advantages compounded over time. Those 10 reais per day are 300 per month, 3,600 per year. Invested at 10% per year for 30 years, this becomes more than 700,000 reais from coffees. But in the first month, when you look at those extra 300 reais, they seem irrelevant. It seems like you're depriving yourself for nothing. Cultural pressure also cannot be underestimated. We live in a society that sells happiness through consumption. Every commercial, every sponsored post, every storefront was designed to make you feel that you need more things. And when you decide not to participate in this game, you're constantly swimming against the current. Each day brings new temptations, new messages saying that your plan is wrong, that you should be spending, enjoying, living. Munger saw this clearly. He talked about how the financial industry has incentives completely misaligned with clients' interests. They make money when you trade, when you buy complex products, when you chase returns. They don't make money when you maintain a simple portfolio for decades. So the entire system is structured to make you feel that simple and patient approaches are wrong. And then there's the question of anticipated regret. When you're following a conservative financial plan and see other people making fortunes quickly with cryptocurrencies, speculative stocks, or questionable schemes, you feel a pang of regret. What if you're missing out? What if your cautious plan is actually disguised cowardice? This doubt can be corrosive. But Munger always warned against comparisons with visible winners while ignoring invisible losers. For every person who got rich quickly with a bold bet, there are 100 who lost everything, but you don't hear about them. Survivorship bias makes it seem like risky strategies work better than they really do. And a solid financial plan isn't about maximizing the best possible outcome. It's about ensuring a good outcome across a wide range of scenarios. The transformation of how a financial plan is perceived happens slowly and then suddenly. In the early years, each month seems like a struggle. You're constantly wondering if it's worth it. But at some point, usually between 5 and 10 years, something changes. Your investments start to grow noticeably. You realize you have options that your peers don't have. You can change jobs without panic. You can deal with emergencies without panicking. You can think about long-term goals realistically, and suddenly that plan that seemed so wrong at the beginning starts to seem like the smartest thing you've ever done. The people who mocked your choices start asking for advice. What seemed like sacrifice starts to seem like freedom. What seemed like deprivation starts to seem like conscious choice. Munger lived this transformation and spent decades trying to help others understand it without having to learn the hard way. He knew that most people won't listen because human nature is like that. But for those who listen, who understand that initial discomfort is the price of future freedom. The reward is extraordinary. Munger's true insight wasn't just that financial plans seem wrong at the beginning, it was that this feeling of wrong is actually a sign that you're on the right path. If your financial plan feels comfortable, if everyone around you is praising your choices, if you're not feeling any tension between what you want to do and what you should do, you're probably just following the herd. And following the herd leads to median results. True financial wisdom, as Munger understood it, isn't about knowing complex formulas or finding secret investments. It's about understanding yourself, understanding how markets really work over time, and having the courage and discipline to do what's right, even when it seems wrong. So, here's a tip that synthesizes all of this. When you feel that your financial plan is wrong, when your internal voice starts to question, when social pressure seems unbearable, take a pause. Take a deep breath. And ask yourself, does this seem wrong because it really is wrong? Or does it seem wrong because it's right in a way that my primitive brain and my cultural influences can't understand? Most of the time, if you were honest when creating your plan, if you considered your real values and used solid math, the answer is the second option. And then, instead of changing the plan, you just need to continue. Keep doing the boring and disciplined things. Keep swimming against the current. Keep going, even when it seems like nothing is happening. Because something is happening, something deep and transformative, you just can't see it yet. And in 10, 15, 20 years, you'll look back and be grateful that you had the wisdom to trust the process when it seemed absolutely wrong. That is the true essence of what Charlie Munger tried to teach us throughout his extraordinary life.